All right, everybody, welcome to another episode of the Bitcoin Bottom Line. This is j.wilson with Josh Olszewicz, and we are joined by Alyse Killeen, who's one of the leading venture capitalists in the Bitcoin space. People don't necessarily think of Bitcoin as a venture capitalist space because it's a little bit different than the traditional market fit, a little bit traditional Silicon Valley space. But I think at least having some focus on Bitcoin, or a lot of focus on Bitcoin, makes your experience as a venture capitalist totally fascinating for me, because I think it's in the space totally, we see crypto get a lot of venture capital ideas. And there's so many cool Bitcoin companies out there, some of those of which you're a part of. And I'd love to hear a little bit more about your story. So where does it all start? Are you a native Californian?
I am. So I'm from the Bay Area. CJ, it's so great to meet you and to be here to talk to you today. Josh, it's really good to see you again. I've been looking forward to being with you guys to discuss Bitcoin for quite a while. So it starts for me in California, in the Bay Area. I grew up in Silicon Valley, so the home of, I suppose, venture capital and entrepreneurship, or the historical home. Of course, innovation is much broader than that. I'm still in California. So I started in venture capital about a decade ago, always focused primarily on infrastructure technologies, like cloud networking, like cybersecurity stuff very early, and data science. And as I was doing that, I discovered Bitcoin. This is 2013 timeframe. And I saw Bitcoin first as a new infrastructure, as a protocol that could be built on top of or alongside with. And specifically what I recognized in Bitcoin was the opportunity for a financial technology that well served poor people and the world's very large unbanked and underbanked population. And to me, that was so compelling because it was a chance as a VC to do really well while doing good work that you could be proud of. And of course, investors in venture capital funds called limited partners are actually quite keen to do just that, to produce returns on their capital while helping to build by resourcing companies that can have a positive cultural impact. And Bitcoin is just that. So it feels like a waste of time, frankly, to spend time or attention on anything else. We do, of course, and the reason why is because there's other technologies and other innovations and innovators that can have influence or insight that can drive Bitcoin. And so we have to lift our head up sometimes to watch that. But in terms of the focus that we have on founders and on trends and deployment of capital, that has to be Bitcoin. It's the most interesting thing around. And I think certainly the most important innovation that has happened in my lifetime.
That was a great insight right there. And I think one of the things that I grasped onto was one of your initial interests was cybersecurity. So let's call it 10 years ago, cybersecurity, a lot of people thought of like hackers just broadly as these kind of nerds in a basement trying to just scramble stuff and hack the IRS and not have to pay taxes or whatever. 2018, Bitcoin's price at this point has been an international conversation. It's broached 5 figures. In cybersecurity today, one of the companies that you're a part of is Casa, I believe, right? So Casa does multi-sig, which is an awesome security feature that Bitcoin has that you don't get with a lot of other things, especially regular exchanges. So in the 10 years or so that you've been involved, or just sort of like a lens of cybersecurity and how it affects, let's say, people's awareness of their own cybersecurity. How do you see Bitcoin improving that in the next 5 or 10 years as more people get onboarded to Bitcoin and start to use more things like Casa?
Right. So there's some really interesting lessons that we can draw from what happened in the development and adoption of cybersecurity tools to Bitcoin. So rewinding to 2012, 2013, 2014 era, cybersecurity tools in the state that they are today was relatively new. And so it was the introduction of data science and machine learning, really artificial intelligence, into cybersecurity for the benefit of enterprise. So the very interesting data point of that time was that once an intruder enters an enterprise network, the average number of days that they were in that network before discovery was something like 270 days. So basically they lived there, right? Before the business even knew they were there. And then came along these new tools. So one of the companies that we had the pleasure to back is CrowdStrike. The now today very successful company. At the time that they were a more early stage company, to convince venture capitalists that this market was going to be huge, and indeed these businesses, that had seemed content to coexist with hackers in their system, that actually they were going to shift and they were going to spend money to enhance their operations and their technical operations, really, to better serve the business and their customers. And so there was, I think in 2016, sort of a wake-up call realization that cybersecurity was important. It affected all of us. It affected businesses, governments, and of course, end users too, right? So the stories of 2016, 2017 were all about these massive data breaches, right? So Target getting hacked, Walmart getting hacked. It was endless. There was a shorter list of people that their user bases were not breached, then there was a list of companies that had been breached. And so users had to consumers had an impossible time trying to protect their data. But it was sort of the pain was experienced first before the problem was identified. Now, with Bitcoin, there's this really interesting opportunity, which is that everyone has sort of felt the pain of these sort of changing rules about money. We exist within a system that's not set up to be transparent, that's not set up for individuals, really to have much influence on. And then, frankly, conventional banking is frictionful, even for people that are very well resourced. So, for instance, if on a Sunday evening, your daughter is abroad studying and needs you to send funds, you can't do that. The bank is, not going to facilitate your wire at 7 p.m. on a Sunday. And so even privileged people have felt the pain of the conventional banking system, and thus comes Bitcoin. And so, and sort of breaks all of these rules. It says two things. One is that we can know the rules of the system and software enforce them, so that we're a system of rules without rulers. And then it also says this network is here for you 24/7. And so I think it was adoption of Bitcoin and Bitcoin technologies is driven by the fact that the pain point was already apparent to most people. Now, companies like Casa make the experience easier and then allow Bitcoin to be more fully used and realized. And what I mean by that is that they take, one of the sort of simple promises of Bitcoin, or seemingly simple promises, which was you can be your own bank, and then they make it accessible. And so part of what we do at Stillmark is we try to discern the fundamental values and promises of Bitcoin. And if we see a company and a group of founders and operators that can make it more available so that it's not just technical folks that can take advantage, those are the types of companies that we want to back.
You've really focused, at least based on your portco list recently, kind of on Lightning. Was that a decision early on as it was developing? Like, oh, Lightning, like this is where we need to focus infrastructure plays, or these are the up and coming businesses, right? So that's part one. The part two is just beyond Lightning now, what do you see like in the future, right? Because you're so good at seeing what's coming before, right? You're skating to the puck constantly before it's there. So what else is coming for Lightning in your eyes?
That's the job. That's what we're trying to do. So we're investing in two buckets. And the first bucket is the financialization of BTC, the asset. So that's where Casa fits. Or a company, our last investment was in a company called Hoseki, Sam Abbasi from Fidelity, his new company, which is a proof of reserve software. So that would be bucket number one. And by the way, mining companies fit there too. Bucket number two is companies that are doing these sort of moonshot projects building on Lightning. It could be other layer 2 protocols. Taro, companies building with Taro will fit into the second bucket. And where we've been focused, where the market's been, and thus where our focus has been, is in infrastructure related companies. So sometimes this can feel a little less personal, or a little less, flashy or relatable. but the pieces of infrastructure that are really going to affect the day-to-day experience of people using Lightning, that's being built now. And so we've been really heads down trying to focus on that. So an example in our portfolio would be Lightning Labs, Voltage, or Amboss Technologies. All of these companies are building critical infrastructure that has driven adoption. So for instance, with the $30 airdrop in El Salvador that happened last year, essentially all of that economic activity was happening on top of Lightning Labs implementation of the Lightning Network LND. And then of course, Lightning Labs liquidity tools help facilitate ease of use of the network. A company that we backed because of the experience of El Salvador and the development of secure, stable infrastructure to drive the economic activity is Ibex Mercado. So it's looking at Lightning Network infrastructure for businesses that will adopt Lightning, and in particular, those brick and mortar businesses, that people are spending their $30 airdrop in El Salvador at, for example. So it was, I like to say that we're, instead of a Bitcoin fund, we're actually a generalist fund within the Bitcoin space. So we're doing, top to bottom, all of it that's happening in Bitcoin right now. But we have to take, this sort of 3-year snapshot of where the industry is with each fund cycle. So for fund one, where the industry was introducing these basic tools to financialize BTC, the asset, and then the infrastructure play around Lightning and, the early sort of preparatory steps for Taro's impact on Lightning.
Yeah, it's interesting because what I'm hearing a lot from you in general and the pre-show as well is that you have to have a very particular low time preference. Not only to predict, like Josh was saying, of where things are going to go, but you also have to sort of ride the volatility of the market growth cycle out, which is very much traditional VC, right? You're thinking, hey, we're going to put money into this company, we're going to help them grow, we're going to give them some coaching, whatever it is, and provide them with some market fit. That's going to take 4 or 5 years or something like that. We're still so early with Bitcoin. There's so few people using Bitcoin. I mean, relative to, like, let's say smartphone use or something like that. So it seems to me like, taking a really big step back, there's still so much growth potential for the broad market, but picking the winners early is a challenge of I would say, of any venture that you make, any investment, right? Any investor looking to get in early. How would you say that confidence in the founders changes from traditional VC to Bitcoin ventures? And some of the names that you're using, like Amboss and Lightning Labs and stuff, they have some all-star rock star people working for them, but you don't see people necessarily making like exits in Bitcoin, right? Is that so? How do you define success along that same time frame, or with those same kind of lenses that you're looking at things through?
So we are traditional in our venture capital practice. So we're just a conventional VC fund that has a specialized knowledge in Bitcoin and then a focus on Bitcoin. The venture life cycle, starting at seed stage, it's about, it can be a 7 to 12 year cycle to go from seed stage to exit, especially if the target exit is to the public markets. Mm-hmm. And so Bitcoin, companies and entrepreneurship is relatively new, right? We're at the stage now where the first mature Bitcoin companies are, growth stage, right? Or the first growth stage Bitcoin companies are just emerging. Mm-hmm. So I expect that we will see those exits, but it takes time. It's not, and the reason why is because in Bitcoin, when we invest, we're investing for equity. We're not investing to purchase tokens, and where the market is immediately liquid. And then, of course, that exit is not based on the appreciation of enterprise or equity value, right? Instead, what it's based on is sort of this community excitement. And so, you're immediately liquid, and your return cycle is more similar to a hedge fund play than a venture capital play, I think. Mm-hmm. But certainly the founders in this space are very strong. The smartest technologists in the world, the smartest engineers in the world are in Bitcoin. I've been really lucky over the past decade of experience in venture to work with just brilliant engineers. And when I saw in, maybe 2013, 2014, in the really early days of my participation in the space, when I saw the type of talent that existed in this space, technically and what their motivations were, it was obvious that you should be spending time in the space. And so when you can get someone with such a brilliant mind for technology and for financial technology specifically, and then see them driven by a mission to offer, free and fair open finance to the world, it's kind of a no-brainer to spend time and to work to invest here. And so to me, it was an obvious play. Now, of course, the technology ask you to believe in a paradigm that's entirely different from other tech cycles. So in prior cycles, the play was to accumulate power, to centralize power, to accumulate data and centralize data. Bitcoin is something different. And so I think for VCs to switch from the old paradigm to the new paradigm and to get confidence that large companies could be built and that enterprise value could be accrued, was difficult. And that was the opportunity for Stillmark, right? Was to not be adherent to an old school VC mindset, but to apply, the tools and the framework of traditional venture, which work really incredibly well to bolster founders, to apply that to a new paradigm. And so, that's the goal at Stillmark. It's sort of to do nothing fancy on the venture side. It's just to be open to the existence of a paradigm introduced by Satoshi and this new technology. Does that answer your question, CJ?
Yeah, I think so. I think it's interesting because the one thing, like when I wrote down when you're talking about that, the traditional venture for the last 20 years has been like, find market fit that you can build a moat around, right? And so you can sort of protect your business by building a moat that will make it harder for other people to sort of emulate or copy or whatever. But with Bitcoin and the decentralization of everything, it's almost like the mission is to build something unkillable. And by having it so distributed and have so many people using it potentially, that's the sort of thing. It's because it's not anywhere, right? It's sort of, you're building something that's a lot more intangible to an attacker or to a competitor. And so it's like the first companies that have gone public have been exchanges, right? We've seen some exchanges go public and stuff like that. And obviously there's been some investors who profited very well because of IPOs for mining stocks or, Coinbase or whatever it was. But I think these other use cases or infrastructure plays, the multi-sig companies, the security-based companies, that's what people really need. That's what they want in Bitcoin, right? They don't just need to be their own vault, right? They need to be their own financial system. If they're going to be their own bank, a bank is loans, a bank is proof of funds, right? A bank is remittances anytime you want. A bank is tangible, like transaction speed and stuff like that. So I think there's obviously a lot of people doing that. I just on my phones, I think I have 11 or 12 different Bitcoin apps. I have access to lots of different.
Which ones what are you using?
So, I trade, there's an exchange that I trade on my phone, Binance US, and then I use Cash App, I use Strike. I have an account with Unchained. I've done loans with Unchained. I have some other like wallet and validator type things on there. I just have to like click through this really quick and see. I have a couple price monitors because I trade. So I'll look at like this. There's this app called HODL. I have a slush pool account. I have the app for that. So like all sorts of stuff. River as well. So one of the things is that I was a traditional equity investor. I would like day trade and stuff like that. I've always been like very interested in gold for the scarcity and the tangibility and the fungibility of that. But Bitcoin to me, when I discovered it, it's sort of like was better versions of all these other things. And it's 24/7, like you said. So I think that the best Bitcoin companies are sort of unkillable because even if they have a structure of a CEO and technical officers and stuff like that, they produce something that kind of almost like an AI, like a sentient AI that just continues to grow on its own because we're so early in 2 or 3% worldwide adoption, right? We still have billions of people to onboard to Bitcoin. So Bitcoin success is billions and billions served, whereas like the company success is like being the best version of that product that they use, the best app or something. So it's really interesting because it's like having a 7 or 12 year time cycle in like a 24/7 market. You have to have like this Zen like ability to block out price, right? Because we were talking about that in the pre-show. So how do you do that?
Right. Well, there's opportunities in the bear market. And so, in some ways we look forward to being present in a bear market. And so let me just give you a quick example. In a bull market, it's really for companies about just keeping up, just keeping their heads above water and onboarding and serving users. In a bear market, it's the time to sort of filter through the metrics, see what worked, what didn't work, adjust your product roadmap accordingly, and then build. Now, a great example of this you can see in what Lightning Labs is doing to develop Taro. So Taro is a direct response to emerging market adoption of Lightning in 2021, most notably El Salvador. And, that was catalyzed, adoption was catalyzed by an airdrop. Now, one of the things that was learned, and maybe controversially so, and I'm CJ and Josh, I'm interested in your opinion on this, but one of the things that was learned in El Salvador and other emerging markets was that for lower socioeconomic status populations, Lightning Network is a total no-brainer. The technology is easy to use. It gives them access to a global economy, really, for the first time. Fantastic. However, the volatility of BTC is very difficult. If you're making a couple $100s a month and your expenses range, between $10 more than you have and $10 less than you have any one month, 20% price movements, 5% price movements really matter. And so for those folks, being able to use Lightning Network without being forced to experience Bitcoin's volatility is really meaningful, and Taro is a reaction to that. So Lightning Labs was able to look at the data, not just in El Salvador, but in other markets where and underbanked people are being served by Lightning Network, take the feedback, iterate and produce Taro, which will allow stablecoins to be exchanged on Lightning Network everywhere. But where the need is most acute, of course, is in emerging markets. That sort of building, to have the opportunity to build that in a bear market, I think is just really fortunate and beautiful. The timing is auspicious. And so the Lightning Labs team can really be heads down on advancing Taro in preparation to onboard new users in emerging markets, which doesn't have to be done in a bull market, by the way, because it's not driven by folks speculating on the price. It's driven by folks that need access to the economy. And that's a great incentive for Lightning Network adoption. Now, something that might not be obvious is that once you have a Lightning wallet on your phone because you're transacting USDT on Lightning Network, you now have a Lightning wallet on your phone, right? And so I think it could be a bit of a Trojan horse opportunity to get BTC and sats to folks that can decide how to split their money into, a hot wallet, their spending account, and squirrel a little away for savings too in BTC. All of this to be done in a bear market, I think, is a really fortunate opportunity for us. And Taro is just a great example, but there's other examples of that too. And so I know that it's not just me that's thinking this, but one of the most popular sentiments that you hear from Bitcoin founders is, thank goodness for the bear market that brings a reduction in the noise produced by altcoin spaces and an opportunity for us just to be heads down and build.
Yeah, for a lot of people in the US, Bitcoin is investing, right? But for emerging markets, obviously, it's more on the payment side, more on like the banking side too. So the Taro angle makes sense. My fear is that this is the slippery slope towards CBDCs, which are coming eventually anyway. So, it kind of is what it is, especially in emerging markets. We're already seeing it in a lot of places. So there are issues with that, obviously. But, if you want an exit that's not Bitcoin, that's not a CBDC eventually, it's going to be something like Taro, where you have that opportunity to transact with a stablecoin in some way. So,
Well, and invariably, those stable coins are going to be more stable than an emerging market sovereign currency, right? So you're going to have, whether it's Lebanon or Turkey or Yemen or any of these places in Africa that have experienced hyperinflation, you're probably better off holding a stable coin pegged to sats somehow, or just using sats as the sort of plumbing, because who wants to hold Nigerian naira long term, like a 7-year contract holding that's dangerous. Bitcoin's bear market filters out so much hopium that it forces people to look at things as they are and not these crazy price predictions and stuff. And so that it's actually, this is my second bear market that I've experienced at this point. So I'm really excited, actually, in a lot of weird ways, because I'm like looking at the filtration. I'm looking at the breakdown of the sort of hero status from some people that are like basically trying to out chat each other in the bull economy. They're trying to show how much they're spending, blah, blah, blah. Now it's like, how good are you at stuff? You know, the writers are going to write more. The builders are going to build harder. They're going to build deeper and stronger technology, because it's like, really, that's how you survive and thrive and sort of lever into the next positive cycle. But it's funny because so many Bitcoiners are like, oh, the price is in the toilet or the price is in the moon, and that's why they're happy, right? Whereas I think on the business side of it, at least like what you guys are doing, you're involved with people that are making Bitcoin successful based on adoption and the, let's say, graphic interface and the user experience for all the people that are using Bitcoin, which is like, that's how we get 1 billion people. It's not because the price goes to 150,000 and then suddenly everybody FOMOs and YOLOs into it, because then it could just crack right back down, right? So
yeah.
It's if it's easy to use and if it fits your lifestyle, and you're a hot dog vendor in Guatemala, or you're an artist or a musician in, you know, Suriname or Venezuela or whatever, can you get paid in sats or, you know, USDT or something like that? And then how much better are you than holding bolivars or some sort of peso, you know, in your life? And
yeah,
that's the bullishness that I have personally, is I think people like you are making it possible because you're investing in people that are talented, and you're giving them the gasoline to drive into the further horizon, you know, with having that 5-year commitment or whatever it is, 10-year commitment.
So here's how we think about it. We think about venture capital as just being resources to help founders accelerate where they're going.
Mm-hmm.
And so these are, we're normally backing folks that are going to get there anyway. And then hopefully with us through capital and, you know, sometimes with network introductions and support from prior lessons learned from working with hundreds of companies, the founders can build quicker. Now, from a Bitcoin perspective, there's one other nuance, and CJ, you pointed it out, which is that if we do good work, I hope that means that adoption is catalyzed. So, and also the utility set that's offered of Bitcoin expands. And so my hope is that if we do good work, the fundamental value of Bitcoin can be increased. And we know historically that as adoption grows, the price of BTC appreciates too. And so sometimes in the Bitcoin community, we've heard when venture capital is discussed, we hear this question around, you know, can money put into a venture capital fund beat the returns of BTC over that same period? But I think that fundamentally misses the point. We're not trying to do that. We're actually trying to like sort of, you know, drive the returns of BTC. And, you know, but fundamentally add value by helping grow adoption and, like I said, expand the breadth of what you can do with Bitcoin, what you can do with Lightning Network, et cetera. And so my hope is, you know, that our good work in some way sort of helps BTC beat the returns that are possible through any venture capital fund. You know, and then the best way, of course, to participate if you are investing in a venture capital fund is to do that while also holding Bitcoin.
Mm-hmm. Yeah, to sort of hedge yourself. And I think the idea of doing multiple things is sort of the thing that we have to discuss, maybe to close it out, which is that there's a lot of Bitcoiners that are maximalists that are just like, oh, everything else is trash. Okay. And that's not necessarily a productive mindset. I think what makes sense to say is that, you know, because we have to eat at a restaurant, because we have to shop for things, there are going to be best versions of all these other services that we experience right now. The goal is to get Bitcoin, you know, meshed into those things so that if I'm going to Whole Foods and I want to buy, you know, some local, I don't know, whatever, some meat or something like that, I can get that from a farmer that's keeping his money in Bitcoin, right? And then that's just going to be sort of like the de facto situation that in a couple more years, more people will be holding it because it's a better way to hold money because of inflation and all these other things. I think the onboarding normal businesses to Bitcoin requires the financial tools and the interface and the usability so that as a company, you maybe have a indicator to say, hey, I should hold this much of my treasury in Bitcoin or something like that. And we've seen people like Saylor go all in effectively, but the ranchers and the guy that sells the iron to make fences and the carpenter and, the donut shop and stuff like that, those people need to have a chance to do it with that, because they don't have the Cantillon effect of being able to borrow against a bunch of Bitcoin, right? So they have to do it on a micro level, and only through Lightning can we do that. I think that's something like a Lightning maxi. But I also think it's important as an investor myself to say, I'm going to look at the broad thing and say, okay, well, companies like Apple or Amazon or whatever, they're still going to be successful regardless of their kind of exposure to Bitcoin. But we're looking for like the Apple of Bitcoin, the Nike of Bitcoin. We're looking for the Monster Energy of Bitcoin or whatever it is, and seeing those things pop up. The same way that there's multiple competitors in the fast food space or something, there's going to be multiple competitors in hardware wallets or multiple competitors for exchanges or cybersecurity. So I do think that what you're doing is good. I do think that it's great to be aligned with somebody that's, ideologically like translatable, because I think the venture side of things sometimes comes across as antithetic to Bitcoin, but being venture within Bitcoin and doing Bitcoin venture stuff is super fascinating for me. It's something that I haven't really. I've got early investments in like a couple companies, but for me it's because I believe in the possibilities of the network. But the same thing with you. I'm sure it's the founders are going to get there anyways. You just want to be a part of that success and a catalyst to that success. So and I guess along the way, not losing track of the fact that this is a 5-year, a 10-year, a 15-year cycle that we're on, on Earth, not just price is crazy this week, and that's the hardest thing that I think Josh and I have to deal with, which is a lot of our friends are probably like, hey, why is Bitcoin 19,000? Why is it 20? Why is it 60? And answering price questions as opposed to adoption questions, which are way more fun. I like the adoption stuff.
Yeah, I think that's very well said. Bitcoin companies are perfectly suited to venture capital. My hope is that Bitcoin founders continue to get this sort of attention, focus, and resources that have been growing over these past, say, 18 months. That's what we're seeing inbound for our portfolio companies. The bear market, I think we'll continue to see that. By the way, a little look behind the curtain. Since the bear market started, we've gotten even more inbound from generalist VC funds that have been distracted by altcoin, the promise of DeFi. Mm-hmm. I don't know, sort of like this vaporware tech that can seem really flashy and appealing in a bull market. When it's not, as you said before, people start to question the intrinsic, happenings of the tech and the intrinsic opportunities, and they tend to turn towards Bitcoin. That's what we're seeing. Our job in the bear market, of course, is to help explain, to create a greater filter for noise for people so that the signal comes through. And I'm glad to be talking to you all during this period, because I know that that's sort of your business as well. And so let's make best use of this bear market.
Let's all become better Bitcoiners in this bear market. How about that?
Well, that's the plan.
Cool. Well, Alyse, I know you got to run. You got another call coming up soon. But the last question I want to ask you is on the DeFi side of things, with Bitcoin used as collateral. Bitcoin has been called pristine collateral. Do you guys try to advise any sort of risk management to the companies that you advise in terms of how much Bitcoin to hold versus how much to sell for maybe mining companies or something like that? Because we've seen some mining companies have to capitulate recently. So is that a question that is popping up right now with some of the funds you guys, or some of the companies you're talking to?
Treasury management strategy is important for all companies, of course, and it's more complex for a company that includes a digital asset and Bitcoin in their treasury. So there's certainly an opportunity for best practices to still be set. That said, I've seen for the companies that we've worked with, both in the portfolio and external to the portfolio, I've seen mostly a net benefit of BTC being in the treasury in a responsible way. And that, of course, if it's placed in the treasury during a bear market and then appreciates over the course of a bull market, companies can, in a non-dilutive way, extend their runway. Mm-hmm. And so I think for the industry as a whole, it's been a net benefit. But then, of course, your risk as a company is denominated in dollars because we're not in a Bitcoin denominated world yet. And then for that reason, you need to make sure that your exposure to Bitcoin as a company matches your risk profile, your risk in operating. And so, I think what's begun emerging as a best standard is to, depending on where the macro environment is, to hold somewhere between 12 and 24 months of runway in cash, and then to diversify the treasury into Bitcoin beyond that. But then, of course, that places you in a position where you're continually needing, depending on growth in your revenue, to liquidate your Bitcoin position to bolster your cash runway. And so there's some complexity to this, but Bitcoin founders, because they have not sort of been coddled by these massive venture capital funds that have this push to deploy dollars, we've never been in an environment where cash is ultra easy to come by for Bitcoin founders. And because of that, I think that we have some really, really responsive financial managers at the helm of Bitcoin companies as a general rule.
Yeah, I think that's as perfect as we can sum it up right there. That was fantastic. I like that. I like that metric too, because if you have a cash runway and then you can sort of supplement Bitcoin, you're protected if Bitcoin does run to the upside, because then it makes your books look better. And the thing is, if you're denominating your business in dollars, in the meantime, you have to pay salary in dollars and stuff like that. Then you can always buy more Bitcoin if you feel like it, right? That's if you have a lot of revenue coming in too. So that's what we try to do at work. If we have too big of a month or too much profit, it's like, hey, let's buy some Bitcoin and try to add to the Bitcoin, make the Bitcoin trade a one-way thing, so that eventually we're protected for that upside. But I know you got to run. Alyse, it was awesome having you on the Bitcoin Bottom Line. I enjoy following you on Twitter, and I look forward to your other interviews and stuff like that as you're kind of getting the good word out there about Bitcoin companies. So thank you for what you do in the space and providing the fuel for these awesome companies that are going to make our Bitcoin in the future better.
Thank you Alyse, so much for having me.
Where else can we find more about you and Stillmark?
So Twitter works, although I suppose I'm not there much, but Alyse Killeen is my Twitter handle. And then Stillmark is just stillmark.com. We have an email address there for founders to reach out, and we're always available. We're really keen to talk to folks building in the space, regardless of how early they are in that process. Awesome. Cool. You're awesome, guys. Thank you for having me.
All right. And thanks, everybody, for joining us on the Bitcoin Bottom Line. Check us out on Twitter, and we will be interviewing more awesome people in the Bitcoin space as we go.